Hello, everyone, and happy Friday. Welcome to the Wall Street Blockchain Alliance's Crypto Roundup. Today is Friday, August 8th, 2025. Ron Quaranta here with my amazing co-host and friend, David Brill. We think Josh might be joining us, David, somewhere on the yacht or somewhere on the Gulf Stream. I know everyone's been really busy, but before we begin, everyone, thank you so much for joining us. You've all been to this before. Obviously, our usual disclaimers. Please keep in mind that nothing discussed is accounting, investment, legal, or tax advice, and that what David and Josh and I discuss really are our own personal opinions, not necessarily the opinions of our respective firms. David, it's been yet another busy summer week in the world of crypto. I keep wanting to say I don't know where to begin, so I'm going to begin with last evening, David. Executive order, crypto is now supposed to be understudied to be available in 401ks and other retirement plans, in addition to things like private market securities. David, is the risk worth the reward in your mind?
Well, look, I've always been a believer that people should ultimately have the choice on what they want to invest their assets in.
Yeah.
So I think from that perspective, it's great. I do think that some counseling around it would be helpful. But ultimately, I think consumers should have the right to choose what projects or what assets they want to invest in. And so, yes, I think this is a step in the right direction.
Yeah.
What about you, Ron? What do you think?
I mean, I agree. You and I are very much of like mind on consumers should be able to invest in or buy what they choose. But I agree with you. There's the challenge of, I'm just going to say broadly, caveat emptor. Be careful what you invest in. I often make the half joke about no one reads Options Clearing Corp disclosures, but a lot of people do invest in options. I think with the proper education, I think it's an important part of where retirement plans go. And to me, the interesting part is you and I know that the bigger firms are always chasing alpha. They're only going to find it in crypto. They're only going to find it in private markets. And I know there's the quote unquote associated risk with that. But I think it's an opportunity. I think it's something like 8.7 trillion, David, in retirement money becoming part of and available to leverage crypto in private markets. It really is dependent upon or incumbent upon the crypto industry to educate. Why is this important to have in a 401k? Josh Klayman, how are you, old friend?
I'm great. How are you guys?
Good. We're talking about retirement plans, which is always a fun now that you can potentially have crypto in it. David, I wanted to build on that a little bit as well. And Josh, certainly want to pull you into that conversation. When we look at the executive order and we look at, David, how markets reacted, Bitcoin's on a bit of a run. Some of the alts are starting to become on a run. Bitcoin kind of sedentary on the news. I think I know why, but I'd love to hear why you think.
Well, I think there are a couple of factors. One is that the Bitcoin ETFs are so widely available besides some of the wirehouses. So people do generally have access to it. And we've seen how many billions of dollars go into the Bitcoin ETFs. And also, as you know, this is an executive order. The Department of Labor is going to have to look into it. Then, banks are going to have to evaluate what risks they may be taking or may not be taking now that they have some air cover from the government. Yeah. So I think people realize this isn't a tomorrow thing, but I do think it is positive. And I would say probably that the proliferation of the Bitcoin ETFs are such that people who want exposure can get it fairly easily besides some of the wirehouses. So I think that's why we didn't get a bigger jolt.
Yeah. And I think over time, David, as that becomes clearer, we might see price appreciation on some of that. Josh, are you waiting for Bonk to be available in your retirement plans? I'm just curious.
No, I am not waiting for Bonk. But I do think I think it's an exciting move. I mean, it's something that makes it that much easier for people to choose to have exposure. Right? They don't have to go separately to an ETF, right? They can just have their allocation. I'm presuming, right, that when you go on your Charles Schwab or whatever your account is for your 401k, you could just select it that way, which I think we're inching towards, having to do less and less work to get exposure. So
right. Yeah. I want to add something to that, Josh. I think that the banks will calibrate what the offerings look like. So I think that the banks will kind of do, as you probably know, like look in this environment, banks will probably have to do some Howey test analysis if they're offering an asset on their platform just to make sure it's not a security. And my sense is that the banks will want to offer enough so that clients are satisfied, but I don't think they're going to offer the whole every single ETF that's available.
Sure.
And I think what will be interesting is when we see sort of index ETFs with maybe like the top 10 crypto projects or in total network value or the top 20 or thematic ones. Like I've been a big proponent of the AI themed crypto tokens, and I think somebody should have a fund for those. And I think people would be interested maybe in their retirement accounts or a staking fund. So I think we could see the largest cryptos in some thematic funds, but I don't think we're going to see that bonk ETF in Josh's retirement anytime soon.
I say it only jokingly, but David, Josh, to that point, I think there are a couple of other things that are happening in this regard, and the three of us have spoken about this many, many times. I think, first of all, David, from a UX perspective, you and I have had this conversation for years. I cannot imagine an easier UX to engage in market participants than having it available in their 401ks or other retirement accounts. But I also think this is still the generational conversation. Senior citizens, for example, will probably not be reallocating retirement funds to pick a crypto ETF or pick a plan that might be able to hold crypto in some way, shape, or form. That said, people like us or younger, depending on what our ages are, we won't talk about that here. But again, that generational, that'll be a requirement for them as they begin to enter the workforce, as they begin to look at what their retirement future looks like. They're going to ask those questions, David and Josh. Why can't I get access to BTC or ETH or whatever it may be? So I think this is the beginnings of, and I hate to use the phrase, David, we've often said, first inning or whatever baseball analogy we've got. It is still early days for that segment of the market, which is very rich and very liquid.
No, I totally agree. I do think that people will want access and they'll use their feet. They will move with their feet if they don't get access.
Yeah.
But I will say this, as we've all been in crypto a long time, I still want our crypto native exchanges and platforms to have access, and I want people to use them. I don't want just the sheer default is that to go to like traditional equity wrappers for the crypto products. I want to see a robust market on both sides. So both crypto exchanges and platforms, DeFi, and then also, traditional platforms and traditional equity platforms.
Yeah, right. I mean, look, if you're a consumer who wants to buy crypto and you're continually knocking on the door of XYZ brokerage where you have an account and they won't give you access to crypto, go to a crypto exchange.
Yeah, absolutely. Absolutely.
Josh, go ahead.
Yeah, I agree with David and with you, Ron. I do think that for the more niche or the more, I don't know what the right word is to say, but maybe even just meme coins in general, maybe those are something that you do go a ways to, at least for now, to an exchange. Whereas for maybe some of the old faithfuls, maybe there's a segment of the population that goes through the 401k or some other way. I mean, if we think back to the old days of crypto exchanges, what was on there? Bitcoin, ETH, Litecoin, kind of end stop, right?
Yeah. No,
Bitcoin Cash and like one other one. Yeah, no, you're right. There were like 5 for quite a while.
But before Bitcoin Cash, it was just the 3.
Yep,
right?
That's exactly right.
Yeah, but I do think it's important that we still need to evolve like the UI UX. We need to work on security. I still get 3 or 4 text messages a day from different platforms saying, oh, there's been an illegal access and this and that. And we've got to clean up our house as well. But that being said, I do think, I think having both options is a good thing.
Yep. David, Josh, not only are you both longtime thought leaders in the space, but you're also some of the most entrepreneurial minded people I know when we look at how you've discussed with colleagues and worked with customers in the space. I want to put our entrepreneur hats on for a second. I'm going totally off script. My argument is also when we look at things like an executive order about crypto and retirement funds and all the other developments, there's a lot of opportunity here. There's a lot of opportunity for fintechs. There's a lot of opportunity for new startups. And I realize I'm going off the hymn sheet for us, but I'd love thoughts about where are those opportunities. We have so many colleagues in different parts of the TradFi market. We have so many colleagues that are let's call it fintech, and crypto adjacent. Other opportunities for entrepreneurs in the space?
I'm looking at Josh. I have ideas, but I want you to give you a chance to jump in.
Ideas for where entrepreneurs can get involved? Is that what you're?
Well, what are the business opportunities for entrepreneurs in this space, I guess, is the question. And I know I'm going off topic, Josh, so you could tell me no if you don't want to answer that.
I'd like to give it a little bit more thought, but I would say if I just think about my current practice right now, and since you were talking about TradFi for a second, my old practice pre-crypto was TradFi, right? And I would say this year and the past several months, and I expect it will be an ongoing thing, the amount of time in my brain, or the amount of space in my brain dedicated to the good old UCC and custody and things like that is astounding. So I don't know exactly how to say, innovators, go do something with the UCC, but I would say if people can find ways to, I just think that there's a lot of education that needs to be done. And so if there's a way that people can find to simplify this, I think there's a lot of takers.
Yeah.
Yep. David?
I think there's an explosive desire for lending, for safe lending of crypto. I think people really want to access it. People don't want to sell their crypto, but they need liquidity. And I think the more options people have and options they deem as safe and secure and reasonable as far as LTV and things like that, I think that's one option. I think staking funds. I think funds that have like top 10 or thematic funds are really areas. And who knows, maybe there's a fintech that comes along that offers retirement plans that are, insured properly and are more crypto native. And maybe that's something that employers would be open to as long as those companies are solid and secure.
David, go ahead, Josh.
I was just going to say, and I don't know to what extent that this may exist, or I think that if it does, it certainly doesn't exist at scale that would be equivalent to the value, just because of various risks and things like that. But when David mentions insurance, I mean, I think not only referring specifically to what David just mentioned, but if you really look at how some of the custodians are set up, right? Without going into detail.
Yep.
The end users aren't always, for example, intended third-party beneficiaries of the insurance, right? So if there's a hack or if there's a shortfall or something like that, query first of all, whether there's enough coverage, but second of all, query how users or holders actually would access that in certain instances. I would say if there were an ability, and maybe there is, maybe you guys are going to say, oh, this is already, you should just look up this company, but someone who is willing to be a provider of insurance to those individuals using these various kinds of market participants, right? Engaging with them, just some kind of private insurance as to the person or entity that has the digital assets, as opposed to relying upon insurance of one of the market participants.
You both know I'm taking notes as you're talking about these new business ideas. David, Josh, thanks so much. Shout out to one of our favorite fans, Emma Channing, who does not like my humor, David and Josh, it seems. So I'll do my best to be more serious about it. The other side of all of this, David, Josh, and I'd be remiss if we didn't talk about it from a legal perspective and regulatory perspective. There's been a lot of updates out there. Josh, I wanted to impose upon you, and we've seen, I think it was late yesterday afternoon, the news about the Ripple case being settled. Can you talk a little bit about like the mechanics of how that was settled? I know that the SEC and Ripple both had a file with court. For those who may not know the legal implications of that, can you talk about that a little bit? You're on mute. somehow.
Sorry about that. So while truthfully, I haven't delved into the actual documentation around this. What I would say is the parties did voluntarily, jointly dismiss their respective appeals. Now, just backing up for those at home, this was not as easy a process as one might have thought. We saw a situation in which Judge Torres, who gave this very powerful decision that was very helpful to the industry, when the parties decided to, try to dismiss the case, there was and try to walk back, the penalties that had been assessed. I think that was the bigger issue, right? That was something where initially there was an objection. You have to show that it's extraordinary. I'm paraphrasing here, which many people thought, okay, first they tried it the easy way. Now it's going to be the hard way. But then the hard way got harder, right? In which Judge Torres provided commentary that actually, it wasn't so easy, that they weren't going to just be able to walk back that penalty. Now, I know here that the case they filed a joint stipulation of dismissal. What I don't know, though, is whether there was any movement on the settlement at all, or not the settlement, but on the penalty. And I don't know whether you guys know that. This really related to dropping the appeal.
So from my reading is they still have to pay the $125 million penalty, and they are still precluded from selling Ripple and like institutional sales, which are still considered securities. And I think one other thing I'd build upon what Josh said was that I think the judge wasn't comfortable with the SEC, and particularly SEC and Ripple to some extent, walking away from her judgment in the case about what was a securities transaction and what wasn't. And just because there was a new SEC commissioner, a new chairman, didn't mean that the analysis that the judge used, could suddenly be just wiped away because the parties didn't like it.
Right.
And so I think that is another part of it as well. But I do think that it is good that this is settled. I don't know how this impacts Ripple going forward, but they're a very creative legal team, and they did a really good job in this case. So I'm sure they'll have ways to, comply with it, but also move forward in how they want to, propose their business.
David, Josh, go ahead, Josh.
I was just going to say, and again, this is without my having looked at the actual documents, to be clear, other than I did see the very short form dismissal, right? Which is, one of the appeals, I imagine, if I remember correctly, was about whether the findings were correct, right? Because remember, Judge Torres split the baby, right? And found basically that certain transactions were offers and sales of securities and others weren't. Yeah. So it is interesting that the appeal was not continued as to the institutional sales, right? The ones that were determined to be securities. Just because as Judge Torres, I think this is Judge Torres's point overall, she may disagree, but with respect to not withdrawing the penalty, is that the law is the law, right? And this is what her determination was of the law, not, and to David's point, it shouldn't be swayed by who the SEC, who was at the SEC or the SEC's current view. So it's just interesting to me that the parties didn't try to appeal that point. Maybe it is because, in part, we know that enforcement isn't happening in this space, and that there are changes in laws happening right now, or at least under discussion or in the forms of bills, and also that there's a different regulatory posture. But interesting that law, although, as we've discussed, it wasn't binding on other judges in the same district, and it's not binding on other courts. But it still stands.
Yeah. David, Josh, this Ripple talks about this as being I think it was a 4-year battle with the SEC. David, I wanted to ask you about market impact on some of that. We've seen a lot of talk about what XRP will be for institutions, what it will be for banks. Do you think a lot of that forward motion for the use case of XRP goes away? is able to move forward if that if some of this goes away?
Yeah, I do. I think there'll be a way to structure these things that are compliant and move it forward. I think, XRP is one of those tokens that people want to own and have done well if they bought it at certain times, and particularly over the last year or so. And I think it is one that is expected. Again, we're not giving investment advice, but I think it is one of those tokens that people expect that when we do see a rally in the altcoins, that will do well. And look, Ripple has their own. Not only does there's their XRP, but they all have their own stable coin. So I think there is ways that they're weaving in both offerings, and so there may be more intrinsic value in XRP than people realize. But again, that's for people to make a judgment on.
Yep. Josh, you noticed that David immediately went to something that popped into my mind, which was, this is not investment advice. That said, Ripple's up almost 55% year to date.
Yeah,
David. So there's a lot going on. We'll have to follow up on how that develops for Ripple. Josh, David, go ahead, Josh.
May I just mention, in addition to having its RLUSD stablecoin, right? We'll remember that XRP was one of the tokens that has been proposed to be included in a potential stockpile. By President Trump. So.
Yep. David, Josh, important stuff we'll have to keep track of. The other couple of interesting things, and we might as well get to it. We've got a hard stop in about 10 or 15 minutes, so sorry for everyone in the audience. Thank you for joining us. David, you and I talked about this in the virtual green room, the Roman Storm case.
Yeah.
There's a lot of consternation from some that are both development focused and privacy focused. He was convicted of the lesser charge, but I think it's an important topic, and I wonder, David, Josh, do you want to speak about it a little bit, because it really does impact or potentially chill how some developers move forward in a world of things like decentralization. David, were you surprised by the verdict?
It's really interesting, because my view was that I don't think that Roman Storm violated any of these provisions. I don't think that the development of code is violative of these. Just because someone else is using that code and violating the law doesn't mean that it should be imputed onto them. So I think, again, like totally in my personal capacity, I was glad that the jury was deadlocked on the two major issues. I think collectively, if you asked, our colleagues and, listen to other people thoughtful in the space, that the money transmitter, conviction can be appealed and is likely to be appealed. And there's some really good arguments for that about, whether he did or not act as a money transmitter. So I think, personally, I'm glad he's not going to jail. I'm glad that, he stayed going to jail until, a pending appeal. And so I think it's a good outcome for him. I'm not necessarily happy for the industry with where sort of things have landed.
Yeah. Josh, weigh in on this. And I know enough attorneys, Josh, that I made the mistake of reviewing and reading some of the verdict and how it moved forward. And some of the complaints about it was that it contradicted some of what regulators have put forward regarding certain activities in the case. Josh, I don't know if you're deep in the case, but I would love your opinion on the outcome, the verdict, and I'm assuming you think it'll get appealed as well.
So I would say, in terms of legal counsel, I think Roman Storm had exceptional legal counsel. Brian Klein is legendary. So, so I'll say that first. I would say also that I think one of the challenges, to David's point about open source software developers and holding them accountable, like I get from one perspective that, like, okay, if we are a government, hypothetically, right, and we find that Treasury says that we can't sanction these immutable smart contracts, right, then whom do we hold accountable? I realize that there is a challenge there. Okay. What I do think also, though, and if we think more broadly than crypto, right, if we think about things like AI and other sorts of things that are being released open source, we want to be able to have innovators develop technology. Once you unleash it, you don't know who's going to be using it. And so I think that's one of the important points. Like, if we are looking at some of the things that the administration in general has been putting out, right? Whether it's the AI action plan or whether it's the president's working group report on president's working group on digital assets markets report of recommendations, right? All these things to make the US a leader, right? Or to have certain, advantages in technology. I think one of the things with open source is once you unleash it, it's kind of unleashed.
Yeah.
And so I just think it's a tough point. And I think obviously we don't want people doing things intentionally to evade laws, but
Sure.
I think we just have to strike a delicate balance there. In terms of some of the arguments that were made in the case, I mean, certainly, and I have not followed closely enough all of these points through. Ron, you're quite further ahead than me in terms of reading the actual latest documents. But I know one of the pieces had been that the DOJ generally had been challenging the FinCEN 2019 guidance about okay, that's what I thought it was. But
I totally blanked on the acronym. I'm glad you jumped in.
Yes. And so the point that the DOJ had raised was that, well, actually, what the 2019 guidance did was sort of narrow the definition from what is in the statute. And so the DOJ had argued, no, we have to look at the broader definition in the statute. So, yeah, I'm glad to know that was what it was, because that's what I thought you were talking about, but I wasn't quite sure.
Go ahead, David.
No, I was just going to say that I also am concerned that, potential impacts on DeFi with this ruling. And also, look, I think that when you look at this administration's view across crypto, this is one area that I think, and again, this was a legacy case brought before the administration came in, probably isn't aligned with their view of crypto and how crypto should be regulated or enforced. So, we have to see what will play out. We do have to remember that, Jay Clayton, who did bring the Ripple case, is now, head of SDNY again. I think he has to be confirmed. I haven't stayed close to the process, but, so he may have a different viewpoint on some of these cases than, the administration does. So there may be some realignment on that. But I also, I'm very focused on DeFi and that the potential implications on DeFi.
Yeah. David, Josh, we've only got a few minutes left. It's in addition to the legislative stuff and the judicial stuff that we've seen in the court cases, the regulators have not been quiet. David, I don't even know if you and I talked about it in the green room, but CFTC is looking at spot trading for crypto. SEC came out with I'm calling it opinion, someone correct me if I'm wrong, essentially that liquid staking is not a security. David, Josh, how important are those regulatory perspectives in changing? And David, for the audience, when we talk about liquid staking, I think it's important for them to understand. Do you want to talk a little bit about what we're talking about when we talk about liquid staking?
Sure. Although you may be very well placed to do that too, Ron.
No, I just have the Zoom and the meetings running and the coffee and the pot. That's it, David.
So basically, it is you staking. I'm just going to make one up, but let's say you staked Ether and you were able to get a synthetic Ether that you could use somewhere else. So basically, you bound your crypto, but you got some synthetic crypto that you could use somewhere else. So it's basically you've tied up your original crypto, but you still have liquidity in that with a synthetic crypto. Hopefully that makes sense. But
and there are returns associated with the bound up crypto. And, staking is an important part of the overall crypto conversation. Even I'm expanding the conversation on staking a little bit, David, when we look at ETFs and the ability to benefit from the staking of particular crypto, particularly the most liquid crypto in this space. Is this the beginning, Josh, of even further activity for the SEC Crypto Task Force? I think they're doing a roadshow. They're hitting up something like 10 cities. I don't even know which ones, and forgive me if I'm getting that number wrong, but this is a really deep engagement for a regulator, no?
Yes, absolutely. I believe that they come to New York in November, if I remember correctly. But yeah, I think this is very deep. I mean, certainly if we think back to what prior administrations had done, we did see the Howie coin right, at one point,
Yes.
right, with its faux advertisement or faux white paper. But this really is going into the weeds about a lot of things where people have taken views and they've had to take overly conservative views in some respects, or sometimes, because there wasn't anything out there. Now, interestingly, this statement, it does carve out certain things, including staking. It does also have caveats in there. So you can't just look at this and say that this means that there couldn't be the involvement of the offer or sale of a security. So I think what this does, though, to my mind, is to show, again, the direction of travel of the SEC, right? Saying that, look, these old cases, they still apply, right? Whether it's land or timber, or whether it is whatever it is, whatever the cases are, but just to say that when we talk about liquid staking generally, here is how we're thinking about it. I think this is particularly powerful because we just recently had seen enforcement actions just months ago against folks in respect of liquid staking. So it is, I think this is important and needed. And I don't think that they're doing it just to do it, just to say, like, covering this, covering that, covering this, covering that. Maybe they are, but I think they're very busy people. I think more likely it's as they've, either as they've withdrawn these various enforcement actions, because it never reached decisions. People may still have questions about, well, is there a basis in law for taking this position?
Yes. David, Josh, important topics. Full disclosure, we are having a webinar or some type of gathering, both on the legal impacts of the storm case. David, you and I chatted a bit about this. We're also doing one on some of the regulatory updates this as well. And in addition, believe it or not, post-quantum cryptography. We're having a deep dive on quantum computing and crypto. So for all of the really smart people out there, stay tuned. David, Josh, I want to go off script on our last topic. There's so much to cover and we're all so busy. David, you and I have often spoken about the poor quality of data coming out of the government and how the revisions are astounding. For the record, I felt a little bit guilty when the head of the Bureau of Labor Statistics got fired for it. Certainly not what you and I had in mind. But I guess the question really, David, becomes crypto market participants, TradFi, so many participants in the broader markets look at this data. What needs to change?
Look, my company, FTI, other companies really have moved the dial on how you look at data and analyze data. And I think it's time that, our government finds more enhanced ways to utilize data, the sources, how they source it, use AI if need be to create models and things like that. But we need to leverage some of this technology because the numbers are off by so much each month that it feels like there's got to be a better way to do it. And I'm not saying that I don't think any of the three of us have that way specifically outlined, but there just has to be a better way. And look, I understand the president's frustration with these massive, revisions. I don't, it's not my place to say whether the head of BLS, she was doing a good job or not, but I totally understand massive revisions and being frustrated by that. And I think, look, like you've said many times, Ron, like we're making decisions about interest rates and other economic activities in the US based off of numbers that I think all of us wouldn't trust. In the moment that they're presented. And I think that's really problematic.
Yeah, and David, to make this a crypto part of the conversation, when you look at the publicly traded companies, you try to figure out CapEx, how they're going to allocate capital, and whether or not they do that and put crypto on their books and records. They make it relevant to the data that's out there because things like employment data, things like interest rate forecasts, they base their decisions on that. So I agree with you. The data needs to be shored up a little bit. It is also reflective of the fact that the people who are doing the work are stuck with legacy tools. Surveys and, that maybe people do respond to or they respond to late. And it is amazing how many trillions of dollars hang in the balance based on data that's using 50-year-old methodology. Josh, did you want to weigh in at all? I feel like this is a David and I yelling about data conversation, but would love your thoughts.
No, I think you guys should be yelling about it. You've been yelling about it since before anyone else I have recalled. Even in the last administration. So I just think this is incredibly important, and I'm without taking a view about the firing, certainly.
Yeah, sure.
I'm glad that it's at least raised to a level of urgency that people realize that this is important. And what is the point of having these numbers if they're going to be wrong and materially wrong again and again? Like, are we better off not having them?
That's a bridge too far even for me, David. I don't know where she's.
It was rhetorical, but if they're wrong, like, why are we,
David, go ahead.
No, I mean, look, it provides like an imperfect view of where the markets are. And then we're making Fed decisions off of an imperfect view. It's look, maybe it's time to have an RFP and like reimagine what the BLS looks like and let really smart companies come in and pitch on how they would refine it.
Go ahead, Josh.
Point about what entrepreneurs could be doing, right?
For everyone watching, this means text messages between David, Josh, and I over the weekend about possible solutions to the BLS problem. David, Josh, we've got to leave it there. One last comment for everyone in the group. I know it's a relatively short episode today. Shameless plug, the Wall Street Blockchain Alliance's in-person crypto and blockchain summit, October 23rd in New York City. Publicly available tickets. There's a block of them. Please join us. You will see David Brill live in person, Josh Klayman, and so many other colleagues. We should finalize the agenda, David and Josh, by Monday.
Yeah. So look, do not miss out on this, because first of all, it's going to be really informative. Second of all, it's going to be fun. And third of all, it's really a good group of people who care about the space and having thoughtful discourse about it. So I highly encourage people to come.
David, and I agree with you, and it's a great audience. And when we look at the panelists, everyone has been in the organization for a decade. So, the experience and expertise. And for the record, Josh has the best origin story. If you can find the video on X, Josh, I warned you I was going to share it. But again, it's the important perspective, the fact that three of us have been in this business for over a decade, and how this is evolving is really something we want to help the broader industry do. So everyone, thank you so much for joining us. We will be back next week. Have a great weekend, everyone. If we missed any questions, info@wsba.co. We'll catch you next week. Take care.
Thank you. Bye.